In the metals quadrant, taking a look at a February gold contract, which has now dropped for two straight sessions. Gold fell for its second consecutive session, but maintained a positive weekly close. It rallied for four straight sessions previously, gaining over 4%, but gave back almost 3% of that gain in just the last two sessions. At one point, gold was only 1.5% from making another new all-time high, but then dropped, limiting the weekly gain to about a half of 1%. The high today was 27.1640. That was up a little bit more than a quarter of 1%. The low 26.7120, that was down 1.4%. And with a little bit of time left in the session, we're still sitting down at about 1.3% from yesterday's close. The dollar was primarily unchanged today, so its typical inverse correlation to gold had no real effect. And in reality, over the last 30 days, the dollar has held an inverse correlation with gold of only about 64%. When you go back about 180 days, it's a 90% inverse correlation. That's a lot more reliable. So an unchanged dollar like this gives you an opportunity to look at everything else going on besides that inverse correlation, like US interest rates, which across the curve rose double digits from plus about 14 basis points in the 2-year yield this week to plus 27 basis points in the 30-year yield. That likely had more of an effect on gold this week than the dollar did. Also, South Korea, recent strength in gold may be due to safety-conscious South Korean investors who, according to a Korea Economic Daily Survey conducted through NH Investments and Securities, new gold trading accounts reached a yearly high of 6,527 in November, marking a 255.31% increase from where that level was in January. That could certainly be part of the reason that gold rallied 4 or 5 days ago as it did.